Welcome back, and now we're going to talk about down payment. That's the big concern for a lot of us. Basically, one of the things that people don't realize is that you're allowed to take a gift. So that's one of the things that it's pretty sweet. You're able to take a gift from, yeah, I did that right. Any family member, a friend, a sister, a cousin, a mom, dad, uncle, an aunt. As long as you got to make sure that the funds that they're using are in an account for more than 3 months. If they could show, it could be verifiable that those funds have been in an account for longer than 3 months, you could certainly use a gift. So just make sure, no cash. They can't come to the table and say, hey, I got $10,000 for you. No, they have to be verifiable. They have to be in an account for longer than 3 months. That also goes for you. When you get your down payment together, don't keep it in a safe in the house. Make sure it's verifiable in the bank. Another thing that people don't realize, which is another great thing, is that especially for like FHA, but a lot of these programs, mortgage programs, you could have up to 6 buyers. Up to 6 buyers in the transaction, so you could get together with a group of friends or family members, come down with a chunk of down payment together and buy your first home. And it doesn't mean that you're gonna have the home forever, but you could help each other get to that point. So that's another thing that people don't realize, that you could combine forces and kind of buy a home. The way to know what your down payment is gonna be is to know what type of home you could afford. And the way the banks do it, I'm just gonna give you the way the banks do it so that you realize what the banks are looking for when they wanna know what you could afford. The formula that they use is what they call a front end ratio. The front end ratio should be, to be on the safe side, 30%. And that, what that means is your mortgage payment plus your taxes of that new home that you're looking at. So what the mortgage payment would be of that home that you're looking at, your taxes plus your insurance should be 30% of your income. Now, another one that they look at is the back end ratio. Now, the back end ratio, they take both numbers under consideration. They take the front end and the back end. Now, the back end ratio should be, to be on the safe side, 50% of all your expenses. So that is the mortgage payment, the taxes and insurance, plus your credit cards, your auto loans. If you have any student loans, anything that shows up on your credit, they use the minimum payment. So all that should not be more than 50%. Just make sure you do your homework and get to know what type of home you could afford, how much you could afford according to your income and your expenses. So that's one way to get to know how much you could afford. And just know that for FHA, I'm gonna write that here. For FHA, it's 3.5%. For conventional, it's 3%. These are the minimums. And the conventional, if you have a strong credit score and your expenses are very low, that's what the banks are looking for. And for the FHA, they're a little less stringent, 3.5, and they allow for a higher back-end ratio. So make sure you do your homework and talk to your lender. Make sure they give you the payment that you would be paying or what you qualify for before you go and look, even before you look for a home. It's good to know how much you want to pay so that you know. It's like reverse engineering the process. Find out how much you want to pay so that they could tell you what you could afford, essentially. So thank you for watching this clip and looking forward to seeing you on the next one.